Well, hey, welcome. Glad you're here. Actually, this is the Ask Assaad show, but it is NOV Live, so it is totally, totally okay. We are glad you are here with us here, and glad that you're part of the conversation as we bring insight out and bring experts from not only within NOV, but also in the world of business, engineering, technology to bring you conversations about the energy space and those factors and forces and people that help shape it. So welcome and thanks for joining us. And so, of course, as always, we have Shelby Dumaine, who is here to help us understand how you can be a part of today's conversation. Hey, Shelby.
Hey, Michael. So there's a couple different ways that our audience watching at home can get involved in the show. So if they would like to ask Assaad a question or ask our guest a question, they can do so by commenting in the comments below at any point during the show. Near the end, that's when we're going to get into the live Q&A with you guys watching at home with our audience. And I'm in the comment section, whether you're on Facebook, LinkedIn, or YouTube. I'm checking that out and seeing what everyone's saying. So we'll get to as many of those questions actually live on the show as we can, time permitting. Other than that, if you would like to get in contact with us after the show, maybe you have a question, a comment, or even an idea for a future episode. We love seeing people's thoughts and what they want to hear from us and from Assaad. So you can do that a couple different ways. You can email us at askassad@nov.com. It's right there on the screen, askassad@nov.com. You can reach out. And then the other way is you can actually give us a call and leave us a voicemail. That number is country code +1 346 223 4799. I love this option. You can stay anonymous if you'd like, or you can let us know your name and title, and we can feature you on a future episode if that's what you would like. So those are a couple different ways you can get involved with us. And I hope to read all your comments and see you throughout the show asking some questions.
Great. All right. Thanks, Shelby.
Mm-hmm.
All right. Well, as we discussed in the title of today's show, we're going to be talking about what it looks like to really look at the energy space, especially from an investor or an investment standpoint. So we're going to go ahead and bring in Assaad Mohanna, NOV's Director of Business Strategy. So, hey, Assaad, good to see you.
Michael, I know you had the NOV Live come up by mistake originally, but I tell you, it's an honor for the Ask Assaad show to be part of the NOV Live.
You know what?
It's an honor. So
you've put in a little bit of work here, so I think we wanted to extend that olive branch. So
I appreciate that.
Yeah, absolutely. Well, good to see you this week. So we're talking about and we've got a great guest. So Dan Pickering, we're going to bring him on in just a little bit, and really honored that he's going to be able to join our conversation today. But just to kind of kick us off, can you kind of talk about, how do you set up today's topic? Really, I mean, we were talking about from an investment standpoint, the lens of those that are looking at the energy space, right? I know there's a lot to talk about.
You know, Michael, when I look at what the show's audience has been like, I think people have been watching us for various reasons. Some come in for the weekly piece of news that we bring in about what's happening in oil and gas. Others come in for a little bit of the business and strategy and insight that we analyze and share about the industry. But I think also very importantly, there's the investment aspect that plays a big role in all of these, really, and how decisions are made on the ground, how why is the insight that we're sharing happening? That's because there's investment moving from one place to the other. So because of that, I'm pretty sure that some people would love to hear that aspect, that perspective of upstream oil and gas, or energy industry in general, and that's why we're having this talk today.
Right. Okay. Well, yeah, and to your point, I know it's the Ask Assaad show, so we're going to certainly let the show's namesake ask the questions, but definitely don't want to be remiss to introduce our guests. So we have today with us Mr. Dan Pickering. I was going to say in the flesh, but in the digital flesh. For those that might not know Dan, he is the founding partner, was the founding partner of Tudor, Pickering and Holt. He is currently the chief investment officer and founder of Pickering Energy Partners. And PEP, for those that aren't familiar, is an energy asset management and consulting firm. So they focus on investing in capital in public and private energy companies. So he started his investing career, started investing in business and Fidelity Fidelity Investments. And his background, for those that might be curious, he had a little bit of time as a petroleum engineer at Atlantic Richfield in Alaska. Alaska, of course, is the one place I haven't gone yet. So not super jealous at all. No big deal. Got a Bachelor of Science in Petroleum Engineering and an MBA from University of Chicago. So Dan, I'm out of breath, but thank you for joining us today.
Thank you, Mike. We're glad to be here.
Yeah. So I know Assaad and I both are really excited to have you. And so maybe I'll kind of kick off our conversation more or less at a high level. So, we've got a lot going on. To Assaad's point, I mean, we're weekly having these conversations talking about, what's happening not only in the market, but, in the industry, technology, the intersection therein. So kind of from your perspective, and certainly definitely appreciate your not only track record, but views in the market. What's your outlook for the industry? How are you seeing things?
Yeah, Michael, Assaad, I think this is a trying time. We are essentially in the 6th year of a downturn that started back in 2014 when OPEC decided to go for market share, and we had a little light at the end of the tunnel in 18, but then sort of back in the soup here over the last couple of years with earlier this year the combination of COVID and an OPEC price war. So we've been through, I think, a fairly challenging time, particularly over the last year. And unfortunately, I think we probably have at least another 18 months to go here. We got a supply and demand imbalance between in the oil markets generally, and it's going to take a little bit of time. COVID's got to get better. We've got to see these OPEC cuts hold. We've got to see the underinvestment that's been happening in the space translate into lower production. We'll see supply and demand balance. It's going to take a little bit more time. So I think right now the good news is we are through the worst in terms of oil price. I think we're probably going to slop around here in the call it low 40s, high 30s for the next year or so, and that is, we're not out of the woods, but I think that will set the stage for a cyclical recovery. So 18 more tough months, but there is light at the end of the tunnel.
Yeah, and that light is great to hear about, Dan. Shale is one thing I'd like to get your thoughts on. That's been the most prominent new entrant to oil and gas mix of products in the last decade. It's shifted so much of the investment in the last few years towards unconventional. But like you said, in the first half of the year, we've seen things fall apart. Spending dramatically crashed. Oil prices go down. Some bankruptcies, some mergers. As chief investment officer, as somebody who lives this day to day, where is Shale on the map? It's probably going to remain a player, but how big of a player is it going to be?
Yeah, Assaad, you're right. I mean, Shale was the game changer, big disruptor starting back in really 2008 on the oil side of the equation, probably in 2004 for the gas side of the equation. So the U.S. has taken every single bit of market share for the last decade. And we've gone from 5 million barrels a day in U.S. production to 13 million barrels a day in production. And so most of that coming from tight oil shale. So it's been amazing, a huge renaissance for the U.S. business. I think the real trick to that, though, is companies really didn't make enough money along the way, whether that's the producers or the oilfield service companies. Capacity expanded a lot, probably over capacity in almost every aspect of the business. And so I think shale is going to be a meaningful player on the world stage, at least for the next decade or two. We're going to be producing 10 million barrels a day, plus or minus, for a long time, and shale is going to be the driver of that. We got to find a way to do it more profitably, and I think that's the process that the industry is going through now. So shale, tight rocks, et cetera, are not going away anytime in the near future.
So maybe follow up to that very point. Then you say that we've got to do it, very very understandably, more profitably. So maybe if you can drill down further, not to use the pun, but what does better look like, right? We hear, oh well, it needs to look better. Well, from your perspective, I know you're eating this for breakfast, lunch, and dinner. So kind of in your eyes, what does better look like if you're kind of looking at this space?
Yeah, as an industry, I mean, at the end of the day, the returns, the net income out for the capital spent just haven't been good enough. Why? Because the industry's thrown a lot of money building up capacity, adding everything from manufacturing facilities to putting new tools in the marketplace, drilling rigs, everything you can think of in terms of kit and people have been added, and it's too much. So what's got to happen is that's got to get squeezed out of the industry. The weaker players are going to take capacity out of the market. Rigs have to go up against the fence, too many pressure pumping assets, et cetera, et cetera. We've got to get the capital down in the business, and by doing that, getting that sort of supply and demand of equipment back in better shape, that's going to allow the service industry to have better pricing. The E&P companies are spending less money. They're trying to wring more money out of the business, give more money back to shareholders. So at the end of the day, as an investor, I want to see higher returns, better capital discipline, and because the business has been sloppy for quite a while, investors are now in the mode saying, give me money back. So we're going to have to see a commitment to generating free cash by the industry. And I think as that happens, so less capital spent, more capital returned to shareholders, better return on the capital deployed, you're going to see investors come back to the space and be more enthusiastic.
So maybe I'll add to that, when we saw shale come in, I think what drew that investment was likely the fact that it's such a short cycle from the investment to the return. I think maybe it's a matter of 2, maybe 4 months at most between the time you spud and then produce. So really, when you compare that to an offshore investment that probably takes years, then the investor is probably more attracted to a shorter cycle space.
Absolutely. When you can get your money back faster, you like that a lot.
Right.
The trick has been that the assumption was if we produce it, we get world prices. It had been a very long time before the U.S. had produced enough that we actually influenced price. And once we started doing that, all of a sudden, that short cycle turns from a benefit to a potential negative because we're out there throwing barrels into a market that might not need it.
So if you're just joining us, this is the Ask Assaad show, and we are talking about the energy industry, oil and gas, and really what does that look like from an investor's lens. And so our guest today is the Chief Investment Officer of Pickering Energy Partners, Mr. Dan Pickering. And so if you have questions for Dan or for Assaad Mohanna, NOV's Director of Business Strategy, feel free to put those questions in the comment section, whether you're watching us on LinkedIn, Facebook, or YouTube, and we will try to get to those questions during our Q&A segment. So Assaad, I know that you already had a question brewing. It's Ask Assaad, but I know that usually we like to flip it and Assaad asks. So don't let me get in the way.
I'm gonna ask Dan. You read my mind. You read my mind. So kind of following on that point, investment behavior in the past. I think companies were more driven and incentivized to produce more. And like you said, I really like that there was a tipping point somewhere where too much production became really influencing to the world supply and demand. Kind of stepping back and kind of drawing the landscape of why this happened so quick. We hear of cash being or finding a lender in this unconventional development space being easy and sometimes cheap. What does that mean? I mean, how's that easy and cheap?
Yeah. So if we went back to 2008, 2009, when we were first starting to develop shale, it was a growth business. Again, we were at 5 million barrels a day, going to 6, going to 7, going to 8. Lots of money being spent. Growth translates to all sorts of capital sources, public markets, private markets, banks. Everyone wants to lend to a growing industry. And so at that point in time, you had competition for capital to get into the space. Take my money, please. And so that brought down the cost of debt, brought down the cost of equity. Stocks traded at high multiples. And so you saw a really cheap capital chasing growth. It's 180 degrees on its head now because all that capital did chase growth. We had too much growth. We blew up the world oil markets. Oil prices are low. Returns aren't great. And so now money's fleeing from the sector. It is hard to get a bank loan. It is hard to get public investors to give you capital. It is hard to get private equity investors to give you capital. So it's actually going the other way right now. Our cost to capital is going up generally. If you are an investment grade company, if you have a very good balance sheet, much like the whole rest of the industry, money is pretty cheap. Concho Resources sold $500 million worth of debt at a 2.5% coupon. Very inexpensive. If you've got a stretched balance sheet in energy, you can't get that money for 10 or 11%. Right. So good balance sheets, the guys who don't need the money can get it pretty cheaply. The guys that need it desperately, it's very expensive. So it's really turned on its head compared to where we were back in 08, 9, 10, 11.
So maybe one for you, Dan, as well. There's never a period of time in history where there aren't, buzzwords or phrases that are kind of the thing of the day, right? I'm thinking back to some from the 90s, but I don't want to totally date myself even, another day. So, one of the phrases that we have nowadays, we talk about energy transition, right? We talk that is kind of the phrase of our day and age, which is totally fine. But I'm kind of curious, are folks taking that phrase and essentially saying, hey, I want to now turn that into an investment space? Is that kind of where things are going to technologies spaces or folks that are moving in that direction? How do you see that?
Yeah, Michael, on the margin, conventional hydrocarbon energy is out and green or clean energy is in. So the energy transition is going from the old stuff to the new stuff. It's going to be a very long transition. There is no question, as investors, there's a lot more focus on ESG, environmental, social, and governance. The environmental piece is pushing, oily toward gassy, toward renewables like wind and solar. It's pushing transportation from diesel and gasoline toward electricity. So it's a buzzword. People love it. They're investing, huge amounts of capital. If you've never heard the name Tesla, then you're hiding under a rock somewhere. And so the energy transition is getting a lot of attention from investors. And so much like shale in 2008 and 9, where people were pouring money in, you're seeing money pour into the energy transition space, whether it be technologies or renewables or electric vehicles. And so the cost of capital there has come way down. We use 100 million barrels a day of oil in this world right now, and we're going to be using a huge amount of hydrocarbons for a long period of time. It's not cool, but that's reality. And so the transition's very sexy. Folks are making okay money at it, probably, but not great, because again, growth, excitement chased the dream. So we've got an environment where it's a very hot space, but we're going to see conventional stuff for a very long period of time.
It's true. There's certainly a mix there. Even with subsidies, right? You got lots of these spaces that are backed up, but still a lot of the cost to like solar was in the 90s, or wind early 2000s. I think we're seeing more and more of that, especially offshore wind in the US coming as the next space for growth. I think it's just a matter of time before these things become economical and attract capital at good enough returns.
That's right. It's going to be we think peak oil demand probably comes in 20 years, Assaad. And in the meantime, you're seeing rapid growth in all the renewables and alternatives. But I'm 53 years old, and I expect to retire and probably die with half the vehicles in the world powered by oil and gas. I expect to see, the majority of power come from natural gas. Coal will still be a place. Renewables are growing quickly, but it's going to be a long transition.
So on that note, we've seen earnings calls in the last few weeks. We've seen a lot of the big oil producers have been shifting and shifted even greater more recently. Equinor just had an announcement with their new appointed CEO. Everybody's changing strategy to become greener, or less oil, more renewables, more energy transition. At the same time, we're also seeing OFS, Oilfield Services, also making the pledge of, yes, we have businesses, we have investments that go into enabling the transition and making it quicker. From where you sit, Dan, you probably also see players in energy transition that have nothing to do with oil and gas that are driving the same rhetoric. Are oil companies really in the driver's seat, or can they move the needle as they have in energy transition? Are they the right contributors to that move, in your perspective?
Yeah. BP says they're going to spend half their money in renewables and green energy by 2030. Will they be any good at it? It's a great question. So a lot of times disruptors come from outside the industry. I think that there is no question that if our industry doesn't start paying attention to this, I think we're past the tipping point. A lot of companies are making carbon neutrality goals, or at least committing to carbon reductions. If you're not doing that, if you don't have ESG as a focus item for your business within the energy business, I think you're going to be very behind the times here. So the answer is yes, our industry can be a part of it. I would expect people from the outside to be very active in it as well. And it's going to be competitive. So I think we've got to do it. We got to focus on it, because the public, the regulators, the government, everybody wants to see this happen. So again, we're past that tipping point. Can we participate? Yes. Are we going to drive it? Depends on how good we are. And you got to balance that with making money. Yeah. So BP is making more money in their oil and gas business than they will in their renewables and alternatives business. You've got to find a way to make money doing this stuff. So you can chase the dream, but it's got to be profitable.
It's interesting because, to your point, I mean, that it definitely is something that ultimately has to keep the lights on. And I'm curious, Assaad. So I know that you're at NOV, Director of Business Strategy. So a lot of folks are calling you and of course having conversations, asking, help me understand, how we can continue to contribute. When we're talking about energy transition. What does that look like from an NOV lens standpoint?
Yeah, well, I like how Dan kind of handed off there with it has to make money. It cannot be for the sake of the mind share, and quoting Dan on an earlier conversation, more than market share. It has to make financial sense. I think we've heard a little bit from our leadership in the last earnings call on some of the things we're doing. things that are contributing. And again, to Dan's point, this is going to be a lengthy process that's going to require a lot of investment, a lot of project management, a lot of heavy equipment, a lot of technology and innovation. And NOV has been doing that. We've been building large machinery that can autonomously move with extremely high precision, and that's really what you need to do. Not just drilling a well, but also erecting a wind tower or constructing a solar farm or building an offshore wind farm as well. So our rig technologies product or business has done its own share of utilizing energy dissipated from the heave compensation system on a well because of how the drawworks work. There's lots of kinetic energy that can be recovered. So we've built a product called Power Blade that's now being deployed on various offshore rigs. That ultimately reducing oil consumption or diesel consumption to power these units. Other involvement NOV has, and we've seen in the news over the last couple of years announcements on NOV Gusto MSC arm or business involved in the design and kitting of offshore wind turbine vessels that erect these towers. So a lot of technology, a lot of work goes into that maximize the efficiency of building offshore farms, the operational excellence of getting those. Geothermal drilling is another one that's clearly in our DNA because of the similarities, but also not only involved in the drilling process, but also in the processing and separation aspect of it too. So lots of investments in renewables, in energy transition, wind, solar, some other technologies that I think NOV can contribute to, given the decades work of just that, the big technology, the energy transition that Dan mentioned, that'll take probably decades to happen.
Well, I'm interested. I know that we have folks that are watching us really all over. So I know that there's always some good Q&A that folks have. So we're going to go ahead and bring in Shelley Dumaine and see if we have any questions for those that are watching. We can give over to Dan or Assaad or both.
Absolutely. So this first question comes from Aaron on LinkedIn, and he's wondering, what is the mindset of the investment community regarding shale well inventory across North America?
Yeah, so Assaad, I'll take that, and please chip in. I think right now, as an investor, the view is two things. One is inventory is not as big as we thought it was for two reasons. One is the expectation of how much per well we were going to get and how many wells we could put in a given spacing unit were probably too optimistic. So we've got fewer wells that we can drill because we're going to have to space them a little bit wider. The other one is prices are lower and there's not as much stuff that's economic down here at 40 or 45. So I think we've seen inventory shrink. That's an okay thing. It might have been too big. Folks were too focused on growth and drilling through that inventory. So it's shrunk here lately. It will expand again as price improves. I would say that we're probably a year or two away from us as investors being nervous that companies don't have enough wells to drill here in the U.S.
Mm-hmm.
Yeah, right on. I would second that, and probably just add that what's going to be touched first is the drilled but uncompleted wells that were left as a result of the downturn. So that's probably going to be the first place money is going to be spent. So clearly, frac companies will come in first, and then as like Dan mentioned, the oil price increases. We'll see more investment go into developing top tier assets in shale. Hopefully with a more optimized pace of development, as we've seen some operators kind of say, okay, downturn or not, here's how we're going to develop going forward to weather these downturns going forward.
Absolutely. And I know we talked a little bit about this earlier, kind of how the process to, complete transition is going to be much longer than some people think. But Arnaldo on LinkedIn was wondering, what is reasons to still invest in oil and gas companies when the trend of capitalization on renewables is kind of rising more and more?
Yeah, goes back to energy transition stuff is sexy, but again, we've got 100 million barrels a day that probably has an organic decline rate of somewhere between 5 and 7%. We're losing 5 million barrels a day if we're not spending money to offset that. And so it really comes down to how long is this going to take? And if you are an investor today in a renewable wind project, if you're providing capital to that project and there's a customer on the other side with a power purchase agreement, you might make 5 to 7% annual rate of return. If you're investing in the energy business, you ought to be getting 10 to 15% annual rates of return. So my take is you can make more money investing in oil and gas. There will be a time when those projects, there won't be enough time to recoup your investment. That's a long way away. Again, the pace of this is the key. If we're going to be producing 80 or 90 million barrels a day in 2030 or 40 or 50, we got to spend a lot of money to keep our production up to that level. And that ought to generate double-digit rates of return. So that's why you do it, because you can make money at it. Haven't made enough money. The industry hasn't in the last decade, but I'd argue the next decade is going to get better because we've learned some lessons from stubbing our toe over the last 4 or 5 years.
Mm-hmm.
Yeah. No, it's good. Yeah. Thanks, Shelby. Yeah, no, those are some good questions in the comments. And maybe the last one for you, Dan, I know you touched on ESG and again, we're talking about the phrases. So that's, sort of a newer one for some, but how do you see that? I know you touched on it, but I just kind of maybe wanted to circle around. How do you find ESG really playing a role, especially as you're looking at from an investor lens?
Yeah, I think so. There are some academic studies that show that companies with better ESG performance have better stock performance. So, it kind of rolls into this good companies. The environmental piece, there's no question folks are focused on carbon and we all want the world to be a better place. And investors are starting to say, if you don't have good environmental, I'm not going to invest in you. On the governance side as well, I think good governance, how management teams are incentivized, performance-related metrics, et cetera, I think are also rising in terms of importance. So ESG is becoming a bigger component of how investors think about deploying capital. It's not the only thing, it's not the biggest thing, but it is a more important thing. So right. It's something that I think all companies are paying more attention to and need to.
So
it's growing.
Yeah, absolutely. No, and I really appreciate the insight. So we've been talking with Dan Pickering. He's the Chief Investment Officer and founder of Pickering Energy Partners. And we've been talking about really looking at the industry, looking at shale energy transition from the lens of the investor or the investment community. So Dan, really appreciate you sharing your perspective today.
Glad to be here. Thanks, guys.
This is great.
So Assaad, I know that one of the things that you talked about, and of course that we talked about today, we're talking about energy transition, and what are some of those technologies and ideas and concepts. And so one of the opportunities that we've had, and of course you have all the time as well, is talking with folks that have ideas and perspective there. So I think kind of coming up in the future, we're going to be tackling some of those topics.
Absolutely, Michael. We've been talking about energy transition. It's been something that's come up almost on every one of our calls or shows so far. Because of that, and because we keep saying that we got some cool stuff to offer too in that space. So we thought we'd give some featuring to that space particularly. So we're gonna have, I don't know if Shelby's okay with that. We're gonna call it the Energy Transition series or episodes.
Well, she is now. Surprise! Right?
So that's where we're gonna bring some experts from within and from outside the organization to talk to us about what's geothermal drilling and how's oil and gas playing a role in that. What's fixed wind installation technology, what's floating offshore wind, what's solar, and how do each one of those manifest itself when it comes to both the industry as a whole, but also what NOV has in store. So stay tuned.
Cool. I think that'll be great. Well, thanks, Assaad Mohanna, Director of Business Strategy here at NOV. So so Shelby, so it sounds like we have a new program coming up, but that'll be great. So before we go, Shelby, I know that we also wanted to touch briefly on an upcoming event that I think is associated with with SPE, or the Society of Petroleum Engineers.
Absolutely. And before I show a little bit on that, I do want to say, for the record, I am absolutely okay with that. In fact, I'm excited about it. So
Sure.
Absolutely. But yeah, so I wanted to talk a little bit about the SPE and ATCE Startup Village. So this is a program. It's happening on, October 13th, 2020. It's going to be a virtual event this year. And it kind of is a two-part program. So it consists of a energy startup competition in the morning. And then in the second half of the day, they'll have presentations from investors, other seasoned entrepreneurs in the industry, and a chance for those startup companies to kind of interact with those folks and ask them questions. And so that is, like I said, it's going to be on October, but the date to sign up for the event is coming up. Here I have on the screen. Applicants, so startup companies must apply by August 14th, which is this Friday. So if you're interested in applying, we're going to put that link in the comments below, but it's a really great program, and I think it's a wonderful opportunity for startup companies in the energy space to get to have a healthy competition, but also kind of lean on the expertise of others in the industry that have maybe been around for and seen some things for a while.
Right. Great. All right. Well, sounds great. ATCE Startup Village. Thanks, Shelby. Appreciate it. So thanks for everyone that was able to join us today. And again, a special thanks to Dan Pickering of Pickering Energy Partners. If you'd like to get in touch with Dan, you can certainly do that. We'll put his email. Yep. So dpickering@pickeringenergypartners.com. I'm sure that he'd love to engage with you, some conversation, or if you'd like to visit our website, that is pickeringenergypartners.com. And we have that there, and certainly can find them in all the social channels as well. So again, a special thanks to Dan for joining us today. And certainly thank you for joining us here on the Ask Assaad Show. Always look forward to having you. So if you have any questions, comments, or ideas for future topics, feel free to put that in the comment section, or you can email us at askassad@nov.com. So for all of us here at NOV, thanks for joining, for watching, and for listening, and we'll talk to you later.